Starbucks shares are selling off this morning, off just about 15%, the worst intraday move that we have seen since 2020, following a surprise drop in same-store sales during the second quarter. Now, it's the first decline that we've seen there, also since the end of 2020. The beverage giant also continuing to grapple with slowing sales in China. Same-store sales in the region falling 11% from a year ago. Rachel Ruggeri, CFO of Starbucks, joining us now alongside Yahoo Finance's Brooke DiPalma. Rachel, it's great to have you again this quarter. Thanks so much for taking the time to speak with us.
Thanks for having me.
Talk to us just about the weakness that you are seeing within the business and exactly what those turnaround plans or what you are hoping to see, how quickly that's going to take place.
So in the quarter, what we really saw was that our occasional customers, we started to see it softening faster than what we had expected. And frankly, we didn't respond fast enough. We had plans in place, and those plans didn't take hold in the way we would have expected. In addition to that, we have the continued headwinds in the Middle East, as well as a more cautious consumer environment in China and a high promotionary environment, which is pressuring the overall market. When we think about our plans, what we've done is we've stepped back, we've talked to customers. We know what our customers, particularly our occasional customers, are seeking is they're looking for more news, more often, a broader offering, coffee, non-coffee, food, healthier choices. And in addition to that, they're looking for value. Value isn't just about a price. Value is about product. It's about experience. It's about offerings. And our Starbucks Rewards customers, for example, they say very clearly they get value for what they get. But our occasional customers, particularly those who aren't in our program, don't see that value. So our greatest opportunity is to create greater awareness of the value that we offer for our occasional customers. So we're investing in and we've accelerated our technology around digital. We're opening the app for all. We're bringing more customers into the rewards program, and we're going to be demonstrating value on Mondays, for example. In a couple weeks, every Monday, there'll be app drops. It'll be very targeted, specific offers. So one person may have a pairing that's like a bagel and a coffee. Another person might have a 50% off as a way to be able to engage our customers more broadly, particularly across the occasional customer group. In addition to that, when we open the app, customers will be able to use a guest checkout to use MOP. MOP is incredibly popular with our customers. It was 29% of our sales in the U.S., which is up from 23% just a couple of years ago. It was 26% of our business in China. MOP really resonates as a great part of experience and convenience. In addition to that, we're strengthening our product offering. And we're having more news more often, broader offerings coupled with an integrated marketing approach so that we can create demand across the day parts largely in the afternoon.
And Rachel, do you think that right now the low-income consumer is still able to afford Starbucks? And with that being said, we ask you every quarter, but how much have menu prices increased from Q2 of last year to this year?
Yes. So our ticket this quarter was about 4%. That was a combination of annualized pricing. So even with the transaction headwinds that we saw, our ticket still held strong. So ticket was a 4% comp. It had about, I'd say the majority of it was annualized pricing. And then we had a mix shift towards cold beverages. So because of our successful promotion with lavender, we were able to increase ticket with the lavender offering. What that says is we have opportunity not only through traffic, but also to increase our ticket when we have the right offering for our customers. When we look at price, really what we believe is the best opportunity for us is value. And that's across the areas that I just spoke about. Customers, when they get that value and they have that experience, then they're willing to come to Starbucks. We see that with our very loyal customers, and we see that as our biggest opportunity with our occasional customers.
When you look across the regions that you're operating in right now, how much of the strategy needs to change, particularly in China, where we saw sales year over year decline double-digit percentage?
Yeah. In China, we feel very convicted about our strategy around continuing to strengthen our position in the premium market. There is a big increase in the mass market, and eventually there's going to be a tiering. And what's going to matter is resiliency. And we've built that resiliency in our business over 25 years in China. Store costs have come down by about 15%. New store costs have come down by about 30% as we've optimized across equipment innovation, across automation. That's helped to make it so that our portfolio is profitable. And that's incredibly important. In addition to that, we're focused on continuing to lead in coffee and create relevant beverages while we're investing in our omnichannel experience. In the quarter, we grew our rewards members to a record 21 million members. And that was really driven by targeted offers, but it was also driven by the coffee offerings that we have, which has created a more routine nature in the business. In fact, we saw a breakfast day part was actually positive comp in the quarter. So we see a lot of opportunity to continue to strengthen the fundamentals of our business while we continue to create efficiency and resiliency in the overall business model, which is going to allow us to amplify our position when the business rebounds.
Rachel, in late 2022 and early 2023, you announced a major revamp of the Starbucks app. Do you think that this move by you guys pushed away consumers perhaps? And how big will this new overhaul be? Could we go back to what we saw previously when it comes to freebies on the app?
I think what you will see is you will see more offers. And what's going to be good about those offers is they're far more targeted and personalized. We have accelerated our technology investments so that we could strengthen our offering. So, for example, on these Monday drops that I was talking about, I might have a different offer than you have, which drives a better return, but it also engages differently so that we can connect with customers and bring them along the experience. Our big opportunity is to increase downloads, increase registration, increase activation, and ensure that we're not seeing customers lapse. And so the offers will go across that continuum so that we can continue to strengthen overall the program, but also the value offering for our customers.
Rachel, we only have about 15 seconds here, but given the pushback that you saw this past quarter, are you thinking about cutting prices?
We are not. In fact, what we're looking at really is the value proposition. So we are investing. So there is going to be an investment to be able to drive that value, because when we bring customers into the program, we know that their lifetime value increases. They spend more money and they come more frequently. So we see that as our biggest opportunity, is bring more of the occasional customers in, even if they're leveraging the app in a guest checkout for MOP. It can increase frequency, it can increase ticket, but it also gives customers an opportunity to see what the value is that Starbucks offers.
Rachel Ruggeri, always great to speak with you. Thanks so much for joining us here this morning, CFO of Starbucks, and of course our thanks to Brooke DiPalma as well.